Olá, pessoal. Tudo bem? Welcome to the Brazil Crypto Report podcast, where we talk to the builders, entrepreneurs, and influencers from across the Brazil crypto ecosystem. I'm your host, Aaron Stanley, and today I'm joined by Gustavo Cunha, who is a Brazilian financial services veteran turned crypto enthusiast, and he's also a prolific writer and podcaster. Today, we're going to be talking about the digital real, which is a central bank digital currency that's being developed by Brazil's central bank. This is arguably the most innovative CBDC project happening in the world right now, and it's ramping up very quickly in 2023. So we're going to be discussing the digital real's design, its objectives, and why it's significant from a global perspective. E aí, Gustavo, thanks so much for joining us.
Hi, bom dia, boa tarde, boa noite. Depends on who you're gonna watch that or listen to that. It's a pleasure to be here. Thank you very much. I follow you for the last time. I watched some of the podcasts, so it's kind of an honor to be here. Thank you very
Wonderful.
much.
Wonderful. Likewise, I've followed you for a long time as well, so I'm glad we finally got a chance to do this here. So to get started, why don't you give us a quick introduction, some background on yourself and how you got into crypto?
Okay. So that's a long story. I'll try to keep that short, but I worked like almost 25 years in the financial markets, in the traditional financial markets. I finished that in 2015. I was the head of one of the directors of Rabobank Brazil at that moment. Then I started a fintech in Brazil with the idea of open banking at that moment. In 1 month that I was there, I just realized that it was too early for the Brazil in 2015 to talk about that. But then on this fintech, I got introduced to Bitcoin with another guy that was working there. And since I think that everyone that's on the financial market and knows how it works, when they kind of understand or read the paper of Satoshi Nakamoto about the Bitcoin, they kind of say, whoa, it's going to change a lot. And that's going to be like that since then. So I just start with the Bitcoin, doing a lot of arbitrage onshore, offshore in Brazil. Then we get all this DeFi thing that was really amazing to see how it developed since 2019, 20. And then I kind of move it in two ways on this environment. One is on the education part. So I have a podcast under the brand of Think Trainer. So I have a podcast, YouTube. I write for a lot of media portals in Brazil as well. So it's a kind of a way for me to get into this environment and know the things. On the side comments, I started my PhD here in Portugal. I'm living in Porto nowadays. And the theme of my thesis was stablecoin. That was really related to CBDC in the end, so it's a kind of similar thing. To be honest, I was intending to do that thesis around the theme of CBDC, but it was 2018 or 2019. I don't know, it was too early for CBDC, and at least here in Porto, in the environment that I had. So I started that on the stablecoin. But of course, I've read a lot about CBDCs, and since then I'm really deep into these discussions, both the academic part of it, also the practical part of the implementation of CBDC. It's worth saying as well that I'm one of the mentors of the Next, which is the Brazilian Central Bank Innovation Hub, or Innovation Sandbox, you can say that. I'm one of the mentors there, so I kind of involved in that as well, or helping the fintechs that goes to these programs to kind of adequate them into the more regulated environments, or how can we fit this innovation into this regulatory framework that we have, or you can flip this coin to the other side, how we adjust the regulation for it to be able to address or to accept these innovations that we see. So let me stop here, because otherwise I like to talk. I'm going to keep talking a lot about that, but just a quick introduction and saying why this discussion about CBDCs and stable coins, it's really a thing that I really like, and I really enjoy to see Brazil the way that it's moving, the direction that they are moving.
Perfect. Thank you so much for that context. So let's dive right in here. And so on Monday here in Brasilia, where I'm based right now, the Brazilian Central Bank had a press conference and they made a couple of big announcements. Why don't you tell us a bit about what was announced?
Yeah, it was announced the initiative of the Real Digital. So that was the idea. We'd see the CBDC of Brazil. There was a lot of discussions on whether the central bank would go for a blockchain like or a DLT or not. In the end, they said that they're going to go for a DLT solution using Hyperledger Besu, which is really nice because it's what you call an EVM compatible solution. We can deep dive into that further in the future. But I think that the thing here that's really amazing about the architecture that the central bank is moving to is that's not going to change a lot in the way the system or the system is organized nowadays. So how let me explain on that. The idea of the Central Bank of Brazil is to have what we call a wholesale CBDC. So there's going to be a CBDC, or the Real Digital will be traded just between the central bank and the financial institutions. So it's going to be a wholesale thing. The normal people will not have access to the CBDC. And the banks, the commercial banks, will issue what they call the Real tokenizado, which is a stable coin, but they will be issued by the banks, not by the central bank. So that's a good thing because it's a different platform, but it's more or less the way the market is today. So, of course, the communication between the banks and the central bank nowadays, it's all digital, right? The bank doesn't send papers from paper money from one to another. It's all digital. So the CBDC will be a better digital way to do that, but it's going to be on the digital side. When you are talking about the individuals, it's more or less the same thing. We don't really trade money, at least not most of the people. We are just sending PIX, TED, and all these things. So it's a kind of a digital money, but you're going to have a tokenized real, which is a better structure on that. How going to this direction, why is it better? So how a CBDC and a stablecoin is better than the systems that we have now, Aaron? I think that the view is that it's more on the infrastructure side than on the CBDC and the stablecoin itself, because they'll have another infrastructure for us to trade these tokens. And as we are going to be on a blockchain, kind of a DLT, these tokens, with these tokens, we'll get as close as possible to what I call a programmable money. So that turn should be that it doesn't change much, but in fact, it changes a lot because it opens the door to a lot of innovations that can come with that. So that's the thing that really was announced. It's you can say that it's more about the infrastructure itself than the currency in the sense of a CBDC or a Real tokenizado. It's a new infrastructure. We already have the infrastructure for the TED and all these things. We have a new one, which is the PIX. That's a kind of new one. It's just a few years that's there. And we're going to have another layer now, a new one, that's going to be the Real tokenizado, or the digital Real, the CBDC of the central bank. So that's what I announced. I think that's one thing that kind of was good on this sense was that, okay, the central bank will go for a DLT solution. That was a lot of discussions on that, but there was not clear whether they would go for that or not.
So was the question, are they going to opt for the DLT solution or like a public blockchain? Was that the open question, or not even use any kind of DLT blockchain infrastructure at all and just use their own private database type thing?
I think that was the discussion on the lift that they had in the last months. So that I think that all the solutions were open, right? So I think that's the solution. A public blockchain, I think that's my personal view. I do believe that's a kind of thing that the central bank would like to go, in a sense that it's open source, have a lot of innovation, but they cannot go in the end. because of either kind of privacy that we don't really have on a public network. Okay, we have the public keys that it's not, no one knows who the public keys are, the owner of the public keys are, but as soon as you trade with them, then you know who are the guy, and you're going to have all the track of the transactions for the last years or whatever. So that's a kind of discussion about private on the public blockchains that was not really the central bank was not capable to use that. Also, there was a kind of control on this public blockchain. So let's say that the central bank will go for the Ethereum, and then in a couple of years, the community of the Ethereum turns to change that into proof of work again, right? Say, or things like that. So they need to control this this platform. So that's the thing that it wasn't on their mind. So okay, Ethereum we're not going to be with public blockchains, so we're going to need a new infrastructure. It could be just a infrastructure that it's more traditional, the more known blockchain, let's put that way, or a more DLT blockchain one. And that was really a good surprise that they say, okay, we did all the tests. We think that the DLT could handle all the things that we want to have. They will perform a pilot in the next, it starts now, in the next 15 months or so to do that. So there's still some open questions on these pilots that these pilots will going to need to answer. I would say that privacy and scalability are the main things that we need to pay attention on going forward. But this thing about, okay, it's going to be a DLT was not decided. It was everything open. Now it's decided it's going to be a DLT. And by the way, we're going to use, or the first one that we're going to test will be the Hyperledger Besu.
Got it. That's super helpful. And I guess before we dive into my next, I want to ask a bit more about the pilot specifically, and like, what are you looking for, or what kind of milestones should we be looking for here with this pilot? But before we dive into that, would you mind giving us just a bit of context, maybe for folks who maybe haven't been following this issue specifically? Could you give us a bit of kind of the historical context of like how we got here? Like, when did the Banco Central start researching this heavily? What's kind of been the development process? They've been talking about it for a couple of years now, but it seems now it's really ramping up. And what's kind of their projected timeline for this to go, fully live?
Okay. I think that one thing that's important for us to keep in mind is that the Central Bank of Brazil in the last, let's say, 10 years or so, they are really in the front line of all innovations in the financial market. They are really on the discussions of everything that's happening. Brazil was like that like 30 years ago when they implemented the SPB in Brazil, which was really a good innovation. Let's say like 25, 30 years ago, it was probably one of the, if not the first one of the first place in the world that you could send money from one individual, one bank account to another bank account, right? What they call the TED in Brazil. It was a really good implementation. But then we keep like 10 to 15 years with not really good innovations in Brazil. But in the last 10 or 15 years, they ramped up again, and they started discussing all the things. So the first thing that it's about everything in the financial market. So they started with it's not really start because they were really in parallel, all these initiatives, but we had the open bank in Brazil, which is not really open banking, it's open finance that was implemented last year. So it's more broad than open banking that we have in England, for example, which is the where this concept was born, like in 2014, if I'm not wrong. Okay, open banking in Brazil, there's a lot of more innovation. They are really there better than the world. They are kind of discussing that on the same level as the world is doing now. Instant payments, Brazil was the 58th country in the world to put in place an instant payment solution, which is the PIX. It was one of the biggest success on implementing instant payments in the world. So the people just use that everywhere in Brazil now. So it was implemented like 2 or 3 years ago, if I'm not wrong. Talking about CBDC, Brazil has discussions with the BIS and IMF, all these international things back to 2015 or 16, if I'm not wrong, is the first paper that we see on the Central Bank about that, Central Bank of Brazil about that. They have really good people, capable people to discuss that on an international environment, how about the CBDC and the things. So they're discussing that for a long time. You are seeing that kind of ramping up nowadays, or we are seeing this implementation now, these discussions coming up to the media and to everyone now, but they're discussing that for more than 5 years now, right? So that's why. And I think this, coming back to the solution, it's really a clever solution in the end, because when they started discussing CBDC, there was a concept of what I call a retail CBDC. So a CBDC that would be issued from the central bank to the individuals directly. So we as individuals would have a claim to the central bank directly, like we have on the cash nowadays, right? And then the cash that we have, it's a claim to the central bank, because it's a money that's issued by the central bank. So that was the first ideas that they came up in 2013 or 14 about CBDC. And it was really good, and maybe somewhere in the future can move to that. But to implement that nowadays in any economy, it's a huge transformation in the financial system. Because imagine that the central bank will need to deal with accounts for all individuals. It's going to be on the central bank. So it's how the central bank will handle that nowadays. No central bank nowadays have structure to do that. Also, we have a discussion with disintermediation. So if the banks are not there, so who will gonna lend a mortgage to anyone, right? For you to buy your house. So it's gonna be the central bank too. Okay, but the central bank will do everything. Doesn't make sense. Okay, so that's why most of the countries are discussing kind of more what I would call a wholesale CBDC than a retail CBDC. It's not to say that in the future we can move more to a retail CBDC or a different thing. Financial structure that will have that we individuals will have access to directly to the money from the central bank. But I think that moving from the infrastructure that we have now to this, it's kind of a chaotic situation for any country in the world nowadays. So we need to go step by step. But coming back to your question, the Central Bank of Brazil is discussing that a long time. So it's not and will continue. I think that's it. We're not talking about the pilots. It's not that they announced the kind of final solution saying, "Oh, the real digital is going to be like this." They are saying that we think that this is the way to move, but we have a lot of tests to do on this way. So that's why they have a pilot. So the pilot will go up to, if I'm not wrong, middle of next year. That's why that's the schedule that they have. The idea is if this pilot turns to be a successful one, in thesis, we're gonna have the real digital and the tokenized real being able to be implemented early 2015 or something like that. So that's more or less the thing. There's one thing that I didn't say as well, which is really important, is they said that they will tokenize the CBDC, right? There's going to be a CBDC. There's going to be a real tokenizado, which more or less the idea of a stable coin. And also there's going to be a token that's related to the public bonds on the system. Okay. They will test that on this pilot as well.
Interesting.
Which is really nice because, okay, they will test the two ways of payments, right? A stable coin and a CBDC. So that's a way to pay for everything. But they will have an asset, a tokenized asset there, which is a public bonds issued by the Tesouro Nacional in Brazil, the Treasury in Brazil. So that's why the Treasury was also on the conference announcing the Real Digital. So that say it's amazing because as soon as we have the CBDC, the stable coin, and a tokenized asset, that's a public bond. This tokenized asset can be my house in the future, can be my car, can be everything that can be tokenized in this system. So they are kind of saying, okay, that's more or less the idea. We're gonna have a system
Right.
where we're gonna have everything tokenized and all secured. Let's put that way. Will be on the system as well, and will be traded on the system. So that's quite nice.
Yeah, yeah. And I think what I find really interesting about this is the ideas themselves are quite interesting and innovative. You don't. I almost to your point earlier about the original conversation about about CBDCs was really as kind of this retail. Okay, everyone's going to have our own account with the central bank, and it kind of raises these questions. Well, why do we need like legacy banks anymore if we all just have our accounts at the central bank directly? So how do you do this without basically disintermediating the entire existing financial system while still like reaping the benefits that a CBDC could potentially offer? And it seems like the Central Bank of Brazil has been able to find kind of a way of harmonizing those or balancing those two things, right? So one of the questions I'd like to ask you in a moment here is just like, how do the existing banks benefit from this? Like, why is it in their interest to kind of play ball here? But before we get to that, I'd like to kind of walk through like what's the experience going to look like from kind of starting from like the end user's perspective, right? So the end user won't actually be using the official digital real, but they would be ultimately using a tokenized, basically like a stable coin version of a real that's issued by a private bank that is essentially issuing those digital reais against like kind of tokenized deposits essentially that are used as collateral. Is that how this is working? So maybe let's kind of work backward from like the perspective of the end user and then kind of up the system toward the central bank.
Yes, so I think that I'll jump here into two examples. An individual that doesn't know anything about crypto and an individual that knows about crypto, right? So I think because the explanation visually it's easier for both of them if we divide that. So an individual that doesn't know anything about crypto is probably not gonna change anything. So he's gonna have this tokenized real as he has nowadays the digital money that he has on the bank, right? So it's going to be more or less the same, a different infrastructure on the back of it, but he's not going to see it. Doesn't matter in the end. So what he will see is a lot of innovative products that will be in place in the future. All right, because as soon as we have this tokenized real as programmable money, for example, and we have, let's say, the ownership of your car also as a token in the system, so we can change do kind of atomic swap. Atomic swap is a swap that's done on the same time for both assets, so that I can send you money and you're gonna send me the property of your car, the token that's the property of your car at the same time, and it needs to have all the both transactions for it to be done. I cannot have a transaction that I just send money to you and you don't send me the token of your car. So that's a very easy kind of example of what a kind of programmable money with a token can handle in the system. So that's going to be very helpful, easy for people to trade this car, to sell a car or to buy a car in the sense. But for the individual that doesn't know anything about crypto, that's it. There's going to be this kind of situation that's going to be more easy on the system. And here I'm talking just about what I call the tip of the iceberg, right? Because that's just a very normal example. For the people that knows crypto and trades crypto, a tokenized real and another token, it's more or less what we are used to have here, right? So with the USDC and all this Aave, Uniswap, and MakerDAO, and all these structures that we have. So we can move the money much more easy. We can buy tokens much more easy. We can change tokens change one token to another token on a very easy, automatic way, 24/7. So it doesn't need to be in a banking hours. So that's all these things that could happen in this environment going forward. And that's of course, I kind of like to divide this explanation both because people that are in crypto, they kind of are used to that. It's a huge benefit that we have here, right? People doesn't know about it. They never experienced it, so it's more difficult for them to see it. But that's more or less the thing. So it opens the door for a lot of innovations to be on the financial system. So I can do another parallel with the implementation of PIX in the last years. For the individuals in Brazil, they don't know how the PIX work in the end, right? So what's the infrastructure that it's behind it, whether it's infrastructure A, B, C, D, blockchain, whatever. They don't know. For them, it doesn't matter. But the solution for them are huge, are much better. They use that because it's helpful. It helps on everyone in Brazil to do that. I think that on the real digital and real tokenizado, we're probably going to have the same thing happening, but on a larger scale, because the PIX is just for payments. When you're talking about the real digital, it's about everything in the financial system. It's about services, it's about investments, it's about lending, it's about everything more, right?
Yeah, and I think that's an important point to differentiate here, is that when most people think of a CBDC, they think, or at least when I think of a CBDC, I think of it as almost basically like what PIX is now. I mean, it's just, okay, instead of paying with my credit card or paying, I just sort of scan this code, and it just, everything sort of gets deducted out of my account. It goes from one account to the next account, and it's all sort of administered by the central bank. And I mean, I think of it purely as kind of a payments mechanism. So what I found really interesting about what the central bank is doing here is that they're viewing this not just as a payments instrument, but as really like the kind of the tokenization of the whole financial system, right? And Roberto Campos Neto, the central bank president, and a lot of his deputies who are more heavily involved in this digital real project have been talking about this pretty openly. And it's one of these things where it's hard to even kind of fathom, like, well, what does that even mean, right? Especially if you're not if you don't, even for people in crypto, like, it's still kind of like hard to understand, like, what does that actually mean? Like, people say this stuff, but it's kind of rhetoric and jargon, whatever. But some of the examples that you've given about the kind of the car transaction and implementing smart contracts and being able to sort of tokenize bonds and all these sorts of things. But when they're talking about kind of the Real Digital as not just a payment mechanism, but really as the kind of the foundation layer of a tokenized financial system, like how should like the maybe like the layperson be interpreting that? Like, what does that actually mean?
That means exactly what you say. It's a different infrastructure. It's a way to have a financial system that works on a tokenized way, in the sense. I think that's more or less what you said, and that's really the way I see it as well. Aaron, it's a thing. I think that tokenization is a thing that it came and will stay there for a long time, right? It's much more blockchain DLTs, and let's take Ethereum, the main blockchain that we have now. It's kind of costly sometimes for you to trade things there, but it's much more smooth than the financial systems nowadays, right? So let's take just one example. So if I have, and it's an international example, and that's a thing that's called a discussion on interoperability, and also affects transactions that we can have that moving forward. But for you to do FX transactions nowadays in the traditional financial markets, it's a mess, right? It takes like 1 or 2 days for the money to move from one country to another. In blockchain, if you have 2 stable coins, $1 and €1 stable coins, you can trade that in seconds, right? And it's transparent. The price is easy. So there's a really good paper done by the people on it was the Cycle and Uniswap discussing about this FX transactions between the EURC and also the USDC, right, in the last 6 months. And it's amazing. It's much easier. It's much less costly. It's much better. So as soon as you have this tokenized world, right, that you tokenize not just the currencies but all the assets, the trades are much easier. It's more transparent. It's more. It's more. One thing that's really important to say: you can trade at a much lower values than we have nowadays. So there are some assets now for investments in the traditional financial market that it has a limit because it's so costly to put that in place. Some funds and some debentures or whatever that you need to have at least, let's say, 1 million reais or 100,000 reais to invest. When you tokenize that, you can divide that in a fraction, in a much lower fraction. So you give access to that to a lot of people that could invest just, let's say, 100 reais on that, right? And that's really good for the whole population. That's a new world in terms of investment. But in terms of the real digital, it's more a new infrastructure that could handle all this new world on tokenization that we are talking about.
Got it. And I think, I mean, one other key point I really want to drive home here to especially to listeners maybe familiar with this topic, but maybe not super familiar with the Brazil angle, is really that there's a lot of other central banks. There's a lot of people that kind of talk about these things, and these are novel ideas, and they're kind of crypto people like talking about this stuff. But the Central Bank of Brazil has like a serious track record of delivering on like meaningful financial innovation, right? They're not just this isn't just stuff that happens in an innovation lab and then it never goes anywhere. Like this is stuff that actually gets released. And 3 years ago, Pix was released, and now basically the entire country is using it, and it's huge, right? So these guys are quite competent, and they know what they're doing, and they have a track record of success when it comes to rolling these things out. So these ideas that they're proposing and what they're saying that they're going to do, it's not just rhetoric. It's like this; they have a track record of delivering on these things. I'd like to jump back to an earlier point I was making, which is really like what's the role of the kind of the traditional legacy TradFi banks, if you want to call them that, in this whole system, right? So they would basically be linked with the central bank as they are now, right? And they would have the ability to issue these tokenized real stablecoins essentially to their customers. But how do the banks benefit here, and what's the role that they play in this system here, and how do they benefit from it?
Okay, so I think that they are really essential in this structure that we are talking about, because they are going to be the issuers of the real tokenized. So it's essential for us for the central bank to have the banks on board as well. So they will have a lot of discussions and a lot of things on that moving forward. For them, it's also a kind of a pressure from the central bank to say, guys, I'm going to put this infrastructure in place. The CBDC is going to work like that, but the stable coins or the real tokenizado, it's in your environment. So you need to work on that. So that, of course, puts some pressure on them, and also kind of brings more competition to this banking environment in Brazil. Right, so because the banks that will issue a stable coin earlier will be better in the end to sell to have the things will be better to access or to provide better solutions for their clients, right? So that's more or less the idea here. You have another angle here as well, Aaron, is that as this new infrastructure is what you call a EVM compatible, Ethereum Virtual Machine compatible. Just to put that in let's say in a very easy way, EVM compatible is a kind of a standard for all this blockchain world, for you to have solutions that works in various blockchains or layers 1 and layers 2, right? So we are talking about Ethereum it's where it was created. But we have, for example, another blockchain called Avalanche, which is also EVM compatible, so we can trade easily the codes from one to another. If you have all the layer 2s of Ethereum, like Optimism, Arbitrum, and all, they are EVM compatible as well. So all this infrastructure, public infrastructure that are on Ethereum, they use the same kind of code that the infrastructure of the Central Bank of Brazil will use. So in this sense, it means that everything that's really working on DeFi nowadays could be plugged into the central bank system as well, right? Of course, the central bank system will be a DLT. It's going to be proof of authority. So it's not as innovative. I cannot just plug a code there from nowhere. So it needs to have some permissions that they will grant or not. But in the end, with this EVM compatibility, it means that everything that's on the Ethereum environment ecosystem could be plugged into the system, and that's really powerful because there's a lot of innovation on DeFi. There's a lot of tests being done on DeFi nowadays that the central bank system could take advantage of and take that from that. And going further on this discussion, not the things that were already developed, but the things that will be developed. So there's a lot of discussion on the Ethereum environment now about ZK, zero knowledge proof, and all these things about privacy here. There's a lot of tests being done. So in the next months or years, they will find a solution to that. Okay, if they find a solution, the solution will be right there for the central bank to take that and to put that into their system as well. So that's really powerful in terms of innovation, and taking to your point, that also puts some pressures to the local banks to say, guys, you need to start innovating, because otherwise the competition environment in Brazil is not just local, it's global from one moment to another.
So would that innovation kind of go both directions, right? Could I take my my digital rail or my tokenized rail stable coins and plug these into like a Uniswap liquidity pool or something? Is that
Yeah, that's another discussion. That's one of the discussions about the solution. How can I get this code and implement this platform into a fenced environment, which is the central bank system? The other discussion here is about interoperability, right? Would I be able to send money from this tokenized real that I have to a really DeFi situation on the Ethereum blockchain? That's a discussion that they'll need to have in the future. One thing that is clear for me, between one system, one financial regulated system, and another financial regulated system, they are working on that. So I would be able to send or to do an FX transaction between this real tokenizado and, let's say, the euro, the tokenized euro in the future, when the euro area have a kind of a CBDC or stablecoin environment as well. That's the thing that it's on them to work on. To get it out of the, let's say, these regulated systems into a non-regulated system, that's another discussion. But even talking on the DeFi environment, we've seen in the last couple of months a lot of these DeFi platforms having two kind of platforms, like Aave. They have both, right? They have the normal Aave that we trade on Ethereum. They have what they call the Aave institutional. Makers going to the same direction. There's a lot of DeFi protocols going in the same direction. So it would be much easier and much more probable for the central bank system to connect with these institutional parts of these DeFi protocols. But to go to the really non-regulated protocols in DeFi, it's a thing that we're going to need to be addressed in the future.
Yeah, it seems like that's going to be a pain point for some of these folks. They have rules they have to abide by. There's privacy, there's compliance, there's AML, there's all these things that they have to abide by, and yeah, it seems like just allowing people to use these coins or these tokens in whatever they want, anywhere they want, for whatever purpose they want, seems maybe not.
That's probably not the idea, right? We're talking about the central bank, so it's a regulated company. It needs to comply with all this AML, money laundering, and all these things, right? So it needs to be a kind of in an environment that they can control and they see what the people are kind of doing, right?
So I'd like to broaden this discussion out a little bit, and let's talk about how the digital real, and particularly how the central bank has gone about designing and building this out. How does this sort of fit into the global landscape of CBDCs, right? Where does Brazil stack up in, I don't know if we call it like a race or a competition to develop the best CBDC, but it strikes me as this is a pretty innovative project that I mean, we've seen a lot of other, countries, okay, like China's doing their thing. Like, the Bahamas and some of these other countries have done their own thing with sort of varying amounts of success. But given, it seems like the folks at the Brazilian Central Bank they really know what they're doing, and they've really put a lot of thought into this. And like I mentioned before, they have quite an impressive track record of delivering on these types of things. So how does the Brazilian digital real stack up against perhaps other kind of mainstream CBDC projects that you may be tracking around the world?
Okay, so I think that I'll do trace three lines here to answer this question. The first one is about East and West, right? When we're talking about the China and all these Eastern countries, it's a different situation. It's a different culture. Their words about privacy is really non-existent. So there's no individual privacy concept on their environment. So it's a different thing. China is moving, so they have done a lot of tests in the last years, and they really are more advanced. It's a different type of CBDC, because the big issue that China had is that the infrastructure of the payments infrastructure in China, it's controlled by two guys, right? WeChat and Alipay. So they are the ones that do most of the trades. So it's okay, that's too powerful for them. I need to have one to control, and I need to have one infrastructure and one system that I can control. That's the main driver for China to do their CBDC. So they're moving, but it's a different thing. When we move to the West, I would divide that in two parts. The small countries, you said Bahamas, for example. Okay, they did a pilot there. There are other countries that did it, but just small countries. So it's more. Maybe that's not really fair, but it's easier to do that than a big financial market as Brazil and others. So when you're talking to the big ones, here in Europe, there has been a lot of tests as well. France has some, and also I saw some days ago another one that's between Sweden and Israel as well. So there are a lot of countries doing that and discussing that. But I would say that the most advanced country here in Europe is UK. So a couple of weeks ago, they delivered a 100 something page document saying what's the main goals for them with regards to CBDC. To be honest, I didn't have time to read it yet, but there are some discussions about whether it's going to be a really wholesale CBDC or it's going to be a part of retail CBDC in the UK. So they are discussing on that. The interesting thing about the discussion within Europe is that although we have the same currency in all the countries, we have different financial systems in each country. So the instant payment that we have here in Portugal is not the same instant payment that we have in Spain, France, and Germany. So when you're going to this new infrastructure, it's probably going to be the first time that they're going to have a really real infrastructure that will work at the same time for all the countries. So that could be a really good thing for the population here. But there's also a lot of discussions on that as well. With, let's say, the democratic way of Europe to decide everything, it's not really the fast way to move. So I don't expect that to be very fast here in Europe. But that would be very good in the future. When they're moving to, let's say, Japan is also involved in some projects as well. When we move to the US, which is the major financial market in the world, US is really a few, if I'm not to say a couple of steps behind on this discussion. So they don't have instant payments yet in the US. So there's a discussion about the Fed now to be implemented, I think, next year, but it's still under discussion. So the financial system, it's an amazing thing to see, because the financial system of the West, although it's the biggest in the world, it's not really innovative. So people that live there, sometimes they're really, and to transfer money from one bank to another is still a kind of pain in the ass in the West nowadays. So so US is really some steps behind on this discussion, but that's more or less the environment that we can see now within the world.
That's helpful. So, kind of to summarize, it's a little more, the Chinese model is really more of kind of control, right? They're trying to wrestle control away from the Alipay and the WeChats and these folks, and it's really more of the government. It's just speaking generally here, right? It's really more about kind of control, where it feels like the Brazilian model and maybe some of the models being employed by other Western countries is really more about trying to unlock innovation and trying to unlock efficiencies. And I think CBDCs do have this sort of like boogeyman type of image of just being like a totalitarian kind of surveillance tool, which, my personal bias is like, I tend to view them that way. just being honest about it.
And that's really amazing, because that's a kind of an image that just it's stamped on the CBDC, right? Every time that we talk about CBDC, it's all about surveillance, or I'm going to lose my privacy. The central bank will control my money and all these things. But guys, what I have on this view, Aaron, is that that's the situation that we have now, to be honest.
Yeah.
So most of our money are on the bank. So that's not a CBDC that will change that. Right, so CBDC is more kind of the environment that will turn our currency into a programmable money, which really digital money, right? Because and the token, and if you align that with the tokenization of all assets, then we're gonna have really a digital environment for this new economy, for this new innovation, for everything. So that's a powerful thing about that, right? When you're talking about this privacy and all this control of the state on the people, guys, if to be honest, being really pragmatic, they don't need the CBDC to do that, right? And
that's a great counterpoint, right? Because you see this type of activity happening now, even without CBDCs, right? You have, just look at what's happening across the crypto industry right now with, kind of this whole Operation Choke Point 2.0, what's happening with Silvergate, and kind of the. You don't need a CBDC to enact financial censorship, right? Or to.
Yeah, but on the other side, you need a CBDC for money to be programmable, right? Or a kind of CBDC environment, or a kind of CBDC chain to do that. So that's really helpful. The innovation is there.
Yeah. So one more question here before we wrap up, and I realize we could probably go on for another 2 hours talking about this. So we'll have to have you back on to do sort of a redux here. There's a lot of ground to cover, and this is just a super interesting topic, and we could easily go into much deeper weeds on some of these things. But I wanted to get your thoughts on kind of this current pilot that the Brazilian central bank announced on Monday of this week, March 6th. That's going to be running over the coming months. And really, what are the key kind of milestones that we should be looking out for, over the course of this pilot? And how should we be kind of reading the tea leaves here to discern, like, ultimately, what is this new system going to look like that will be unveiled in 2024 if all goes according to schedule?
I think from a central bank perspective, they will test everything on the system. So they will test the issue of the CBDC, the issue of the government, the real tokenizado, and also the issue of the government bond token. So that's something that we're going to test. And also all the transactions between those three assets, three tokens. So that's the test. And also burn these tokens as well, right? Because when you're sending to one, you need to burn. So that's the thing that we're going to test during this period. As I said at the beginning, there are two things that really are on the core of the test, in my view, which is privacy. How how they control that. So there's a more technical discussion about DLT, because on DLT you're going to have nodes, right? So how many nodes are you going to have? It's going to be it could be public nodes, or it's going to need to be really a node that would be regulated by the central bank. Let's suppose that the nodes will be the banks, but how a bank will control a node and not see the transaction that other banks are doing, right? So that's a thing that they're going to need to test here on the system, which is
Yeah,
really
because you get
important.
into some pretty steep competitive issues there, right? If I mean, this is a reason why a lot of these kind of permissioned blockchain like coalition projects have never really panned out, right? Is because to a certain like these companies may all be in the same industry, but they're all competing with one another, and they don't necessarily want everybody else to know exactly what your transactions
Exactly.
are, how much you're paying for things. It's or even who owns the IP to what's to the so. I think there's some issues here that haven't been resolved, at least previously, in other types of environments. But at the same time, it wasn't a governmental authority that was sort of mandating this, right? It was these coalitions of companies that kind of voluntarily come together and say, hey, let's test this out, and then they decide, hey, it's not really working, so let's do something different.
Yeah, and
so it'll be interesting.
There's one just one point. Sorry to interrupt
Sure.
you, but there's one easy solution would be to have just one node, the Central Bank of Brazil, that will control and see everything. But then the DLT means distributed ledger technology, right? With just one node, it's not really distributed. So how you handle that? So that's one of the points.
And then actually one other question here that I think a lot of folks have, I've had this question myself. I've been asked this question by people, and I would just love to kind of get your quick answer on it, which is we've talked about certain parts of this, but I would just like to kind of get your straight answer on it, which is what is the relationship between PIX and the digital real ultimately? How will these two sort of complement each other, right? We've had a lot of people kind of asking, like, well, why do we need a digital real if we already have PIX? Like, or how will these work together? How do you see these two entities sort of dancing together essentially?
It's a good question. For me, they are different infrastructures, so they are different things, right? As we have the system that we use to pay the TEDs, it's to transfer money from one place to another. So the TED transaction in Brazil, it's one system. When you go to the PIX, it's another system that we use. When you go to the CBDC or the real tokenizado, it's a different system that we're going to have, a different infrastructure, a different layer. So they are, of course, they connect one to another, but it's a different thing. And then that's probably going to be at least as good as the PIX in terms of financial transactions. That's the thing that we'll test in this, that we will test in this pilot. And that's the second thing that I said about the test that will be done. So the first one is private, the second one is scalability, right? So can it handle the amount of transactions that they will need? So because we on PIX, and now that's one point that it's really a different thing. PIX is just a way of payment, right? So it's just a currency. We just use PIX to pay, right? And if it's an infrastructure just to transfer money. On the real tokenizado and the real digital, it's an infrastructure not to transfer money, but to keep assets as well, right? On this new infrastructure, you're gonna have all your investments there, right? And let's move forward like 2 or 3 years from now. Let's say that's successful, it's implemented. You can imagine a situation like that. So today, if you have investment in shares, in bonds, in CD from banks, it could be in different custodians in Brazil. So one, it's going to be on B3, the other is going to be on the bank. If you invest in funds, it's going to be in another custodian. So you're going to need to have, at the end of the day, to have contact with all these guys to get your position, your total investments, right? In this new thing, it's just a wallet, right? It's a wallet that has just any tokens that you have. So it's on your wallet, everything. So this figure of a custodian, it's not there anymore. right? So that's a thing that it will be tested. It's a pilot, but that's a really thing that's really powerful in the sense going forward, because everything that you have, it's going to be just in your wallet, as we have in crypto nowadays, right? So it's easier for you to control that.
Yeah, and that's what's interesting is like that's where you see a lot of these kind of just weird, like wonky crypto concepts, right? I mean, this is kind of how it's easy to envision how this is how these things become mainstream, right? Where it's a digital wallet that stores all of your assets, right? It's kind of like a crypto thing right now, but in a few years, like it could be at the point like, okay, you own in your wallet, you own all of your share, all your like your retirement plan shares, like your individual kind of ETFs and other types of shares, and these are all tokenized. You own like the deed to your the NFT that represents your house, right? Or a tokenized, maybe you own a fraction of an investment property in an NFT form that's sitting in your wallet, right? Yeah. And these are the types of things. This is kind of interesting because all these like weird wonky things we talk about in crypto, it's like, okay, this is actually how this becomes a mainstream thing ultimately, right? Like there's going to be this is how it goes. This is how it crosses the chasm ultimately. Anyway, well. We'll leave it at there. Gustavo, we'll have to have you back on to talk more about this because this is super interesting. And there's just a lot of honestly, I had a whole list of like 2 pages of questions and I think I maybe got through like 3 of them.
So it's just a matter of us to have an agenda and check. It's going to be a pleasure to talk to you again and your audience as well, Aaron. It's been, I really appreciated the discussion and the questions. I always keep saying that I'm an interviewer as well in some podcasts as well. When I'm interviewing, it forced me to think about the subject or to let's say to do the research or to learn about that. That's probably what you did on building that list. But answer is a different thing, right? Because it's just okay. You're gonna have I need to think. There are some questions that you've made me that okay. That's a point that I didn't thought about, and on the way to discuss, I thought about that and I have some conclusions, some better knowledge about this thing. So that's really powerful. Thank you very much for that.
Yeah, thank you. Thanks so much for coming on and sharing with us your experience here. And we'll have to have you back on when again to for a follow up here. So anyway, you're pretty findable online. So I'll include all the links to your various platforms and social handles and whatnot. You're pretty ubiquitous, but I'll include all that stuff in kind of the show notes and everything. Folks want to get in touch with you. But thank you so much for taking the time here.
Thank you.